Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Who is the real DIY investor? Many of us believe that we are DIY investors. On what basis do we conclude that we are DIY investors? It's very simple. We think that if we don't have a paid advisor, we are a DIY investor. Some people are even more simplistic. If they are trading on a zero brokerage platform, they believe that they are a DIY investor. Now, this is a very reductionist argument and sadly a false argument. In my opinion, somebody who takes advice from anonymous dark advisors in social media is not a DIY investor. Similarly, somebody who copies another investor is not a DIY investor. Similarly, somebody who crowdsources tips is also not a DIY investor. A DIY investor, in my assessment, is somebody who creates his own ideas, builds his own research, manages his own decisions, and constructs his own portfolio independently. So, if we are going to take crutches from here and there and do patchwork and build a portfolio, we are actually a crony advised investor, not a DIY investor. I know what I am saying may be unpalatable to a lot of people, but that's the hard truth. The problem with being a crony advised investor is that you have the risk of becoming influenced by vested interests, becoming a victim of pump and dump, or simply becoming someone who can be misled by another person's ignorance. In my assessment, the cost of these three things is way higher than the cost of good advice. But most investors who are cost obsessed do not understand the cost of making a mistake because of taking advice from unreliable sources. That does not mean to say that paid advice is completely reliable. I am not trying to make that point. But if you are able to source good advice at a modest cost, I am quite certain that the value that you spend for that cost will be fully justified. As the markets correct and correct more, the price of decisions made from random sources of information and what I call as crony advisory is going to be very, very high, and that price is something which most retail portfolios cannot afford. The cost of mistakes, when they happen, can be very, very high. Often the cost of mistakes can be so high that they can almost make an investor leave equity investing, and that is not a happy prospect. That is not something any of us wish for. What we really wish for is a credible method of working for a DIY investor. If you can do it all by yourself, do it. But if you cannot do it by yourself, then make sure that you have credible advisory support. Don't think that what comes free is credible, and don't blindly trust anything that you hear. This is not the time for following such an approach, and this is a time when if you follow that approach, you will pay a heavy price. Try and become a genuine DIY and win on your own steam. Hopefully, it happens for those of you who aspire to be DIY investor. Thank you for watching this video.